All right, guys, if you're just joining, welcome, welcome. And again, as I always start, thank you guys for sacrificing some of your time to being on these market recaps. So we're gonna get right into it, okay? Let's see. Let this guy in here. Michael, welcome, welcome. We're just getting started, so you're right on time. So the first thing we're gonna take a look at is IWM, guys. We're gonna take a look at it for today. This is the daily chart. That's why it's so wide. And we're going to take a look because this actually started off the day on a rough patch for me, right? And we're going to look at what I was looking at, what I was anticipating, and what happened when um, basically what happened and what it came down to, right? All right, perfect. So looking at it here, I had taken a position around 950, 947 or something like that. And I had taken the position anticipating a bit of a bounce on the call side, right? A bounce off the EMA 50 was what the play was. Okay. I was like, all right, we're heading into oversold territory. We should see a bounce or nearing oversold territory on the lower end of the RSI band. And I was anticipating a bounce off the EMA 50 and the 60 to see an upward trajectory push past the 20, which would have gotten our, that would be like 15 to 20% there. So on IWM, I was green for the slightest of moments right here on this small bounce over the on the EMA 50. I was green like 2%. And then what happened? The trend completely broke. Well, actually, and I'll explain what I mean when I said reaction in a second. But my initial reaction was the trend broke and we saw retest here. I'm expecting, okay, cool. We'll get a little bit of a dip, bounce off the 200, and then we'll be okay. We ended up seeing an immediate retracement below the 200. And by then I was like, oh, this position's cooked, right? It's time for me to get out of this position. Stopped out. I ended up taking up a significant percentage loss, but because the contract's so cheap and I didn't only had, I think, 15 contracts, the dollar amount wasn't that much. But still, percentage wise, it was a large amount of loss. And what it came down to, it chalked it up to I took a bad entry. There's no if, ands, or buts around it. There's no sugarcoating. There's no, oh man, like I I was spot on in my analysis and the trade reversed on me. No, all it was I took a bad entry. Okay. What I probably should have done in this situation here was I probably should have waited to see how we tested the 50 instead of taking it on the initial test, right? Because I hadn't seen how it was going to react right off the top. Okay. And this is again being fully transparent and allowing you guys to understand thought processes and entries and exits, right? Because at the end of the day, we are not, you know, these magical stock picking robots, right? We take very educated positions and we're blessed and thankful that we hit more often than not. But I'm explaining to you guys what it is when you're analyzing stocks, right? So, like I've told you guys many times in the past, if someone ever tells you they're 100%, run far away from them because that's not the case. But again, in this situation, what I probably should have done was see how we interacted with the 200, it was the 50 and the 200 first to see if the potential of a downtrend or potential of a reversal, right? For that continuation that I was looking for. Taking a zoom out on the 5-minute chart, we'll see a little bit of a clearer picture as well, right? So on the 5-minute chart, early part of the day, it's a lot uglier, right? It basically looks like a candle straight down. And what happened was, and this is where I made my mistake for taking a bad entry. I was looking at the 1-minute chart and I based that off of the 1-minute chart. I neglected to do my due diligence correctly. And I should have analyzed this on the 5-minute chart because what I would have seen is this here. Who could tell me what happened right here? Correct. A double top in combination with, you guys can see what I'm circling here. Exactly, Ben. There's a double top on the 5-minute with an overbought RSI. But If we look at that same time frame on the 1 minute, what does it look like here on the one? Yeah. Same time frame here on the one. What does that look like? Oh, we're going to get a bounce off this EMA level and we're nearing oversold territory, correct? Right? So in this situation, something I always talk about in these recaps, using multiple time frames for confirmation. Okay. So again, I'm sharing this with you guys to show what this ended up being was nothing more than a bad entry. Okay. A bad entry in a play to the wrong side of the ticker. Right. So show you guys what I looked at initially, but then showing you guys what I should have actually been looking at here. So that way we all learn from our mistakes, right? So seeing this here, I'm like, oh, double top, hard double top, instant rejection. And then once we rejected off the double top, looking at the 1 minute, it's like, okay, we're retesting the 50 and the 200 here. But looking at the 5 minute, we see that we had already broken that 200 support on that big red candle on the initial downtrend, which would have precluded us taking a further step down. And that should have been a trip to the reversal side on a put versus a hope for an EMA 50 bounce. So again, this is to show you guys how a chart can be misread, right? And how using multiple time frames, not having confirmation bias, but leveraging your existing knowledge and seeing, okay, let me do my greater due diligence before taking a position and how quickly a position can reverse if you take a bad entry. Okay, so that's what happened with IWM. Swapping between time frames, Ben. Yep. So this is back on the 5 minute chart here. So I just wanted to show you guys that as an illustration as to what I was initially looking at. And during live trading, I'm looking at multiple time frames as well, like going back and forth on multiple time frames for confirmation. However, during this particular entry, I was, I mean, for lack of a better term, I was biased towards the 1 minute. And so in this scenario, I it led to me taking that bad entry. So, and that's why it got cut really quickly. So that's this position in a nutshell, right? Also knowing going into this week that we were going to have earnings and it was probably going to be a range trading day. I knew we were going to have a pullback. I didn't expect it to be that quickly and that rapid in terms of like the speed at which it fell and the timing of the timing of the day. I thought it was going to come a little bit later. So again, chalk it up to a bad entry at the end of the day. That's what the IWM play was, right? Now, all right, Alex, welcome back. Welcome back. Let's take a look at SPY because this will give you an idea of what I meant when I said earlier during before I opened the actual recording of the call, range trading. Okay. So look at SPY from the beginning of the day. We open up here, fell below all major EMAs, bounce back up, and we're pretty much trading within a dollar window the entire day, right? Got a little mini, little mini V's here, small, little bit of uptrend, which end up double topping at this level. Small rejection here, rise up, another double top, rejection below the EMA support, up, down. So when we say range trading, guys, this is what a range trading chart looks like. It looks like an EKG, just up and down, up and down, up and down within a pretty tight window, right? No really strong breaks to either side. We had a break up to 455.03, and then we immediately saw a retracement back down to 453. You see, so SPY wanted to trade within that tight window, right? Now let's take a look at zoom out on SPY's other time frames. So look at the 5 minute. The 5 minute offers a clearer picture of the range trading on the day, right? Because now we can see it how we shifted. I was going to use another word, I was going to say vacillated, but how we went between the key levels of support and resistance each and every time. Vacillated. Vacillated. Oscillated is a little bit different. But so you see here, trading even on the low of the day. You know, we see that bounce here to 451, and we just kind of went all the way back up. So with SPY, especially being that today is or this week is, we have earnings and we have Fed, the markets are likely going to be chopping between these key levels, right? Now, you're probably like, Trade Runner, what's going on? What do you mean key levels? We didn't really see much on the 1 and the 5. And you guys would be 100% correct. Not nerdy. I'm sorry. I have a large vocabulary. I apologize. So let's see here. When we zoom out and look at the 15-minute chart, get a little bit of a clearer picture. SPY hit a double top before its initial rejection on the 15th, right? We got to zoom out to see the larger picture. We could probably go on like, let's do the 30-minute. Okay. Small double top, then we get our rejection point, right? So when we say range trading, that means we're not likely going to see a huge move to either side because the tickers are going to be traded within a tight channel, right? No more was this more clear than on Apple's chart, okay? Now we're just going to take a quick look at Apple. I know I was talking with Hovering Salt and a couple other members in the chat around 1:30, looking at Apple. Now, look at this on the 5-minute chart. What do you guys notice about Apple's chart right here at the 5-minute? And then we'll also take a look at the 1 minute. What do you guys notice around 1 o'clock? Low volume, yes, but that was all day though. It was a low volume day all day today. So that's kind of why we had such major movement outside the gates on the open, because it was a relatively large amount of volume in one direction. And when compared in comparison to, you know, a normal day where we're seeing a little bit of action on both sides. So a small volume push towards one direction on a low volume day has a significant movement. Yes, a very, very, very tight consolidation, right? And I believe I said I was and Hovering Salt, correct me if I'm wrong. I believe I was talking to you when I said this. When someone asked me about Apple, I was like, well, I think we're going to see a small move to the upside. Again, this is around 1 o'clock. A small move to the upside before what? It pushed back below to the downside, right? And what happened here? Around 1 o'clock, we got a small push to the upside and immediately saw a downtrend, right? But then we ended up kind of reversing a little bit here because the EMAs are still very tight. But we were trading like this for a full 30 minutes. Not a lot of movement. Volume is really, really low. The largest volumes of the day actually were, aside from this push here, was all sell volume. All the large candles were all sell volume candles, right? Till the end of the day, which we had this crazy push off the bounce. So again, this is relatively normal on weeks where we have massive earnings. I mean, tech earnings are probably the biggest earnings because they have such a significant impact on the market as a whole. But also we have Fed stuff going on this week as well. So market wants to hear the earnings reports. They want to make sure that they're positive earnings reports. And then because of that, that's going to influence a lot of the direction of the inflow of money, right? What we saw today in the market open was a bit of a retracement after Friday's closing push. You guys saw tickers like AMC take a massive sell-off before kind of reversing a small bit. But if you guys remember, AMC closed and it almost doubled, actually did hit over 100% at one point during aftermarket hours on Friday, open today at a little over 90 cents where it closed. So that's a lot of volume in one direction. And as overall, the market itself wasn't in a mood, so to speak, of choosing a clear direction or like, hey, we're going to be in an uptrend all day today, or we're going to be riding, this downtrend down to this next key area of support, right? It was kind of like, hey, we're going to bounce between support and resistance for 30-minute intervals at a time, and then that's would be the perfect time to play, as Ben likes to call it, the V game, right? Small V, small V's. These are not 100%, 150% V's. You're probably looking at, if you catch it near the top, 20 to 30%, catch it near the bottom, 20 to 30%. And that's what a day like today, when we say we're range trading, really means. We're not looking for home run swings during range trading days. We are looking for small, secure wins. Okay. I will bring up Google here really quickly. So we took that one earlier this afternoon or earlier this morning, and we had taken it here. Got our average down point right here near the 123 levels. I was very adamant in that being my adding point, just because I knew what was I playing. Let's see if you guys are paying attention. What was I playing when I said that the 123 level would be my add zone for Google? I'm not touching anything else earlier. Yep, exactly. Exactly, guys. So that's what it was. So that's why I was very, very, clear. I'm not adding anything until I get to this level here, right? I don't care if we get up here. I was down 4% at this point. No, yeah, 4%, and I was down 6.2% right here. Took my average down, got down to under 3%. Didn't add anything else, and then I got my break once the levels in the EMH crossed at this point in time, and we got out. Now, one because it's earnings week, something very, very strange happens with premiums. I'm sure you guys noticed when you went to buy your contract today. On tickers that are affected directly by whatever earnings that is, whether it's their own earnings or their sector's earnings, right? You'll notice tickers like Google were significantly more expensive than they were normally, right? We're doing weekend expirations, and normally those are like, a dollar 20 per contract. They were over $3 per contract, right? And the reason being the market is pricing in volatility, right? It's called, when you hear a stock trader or someone who's discussing a stock chart talk about IVs, right? And I don't mean just inverted V's, right? When I say IVs, I mean implied volatility. Okay. Implied volatility is a term used in trading to assess the level of risk for a particular ticker to move in a direction, and then the premium is adjusted accordingly. I know some of you guys have asked in the past, well, on Fed days, like CPI days, why, or Federal Open Market Committee days, more importantly, why are premiums so expensive? It's because the market is anticipating more volatility on this specific day because we're getting a rate increase or decrease announcement. We're getting a rate pause, something like that. Those things affect the market. And as such, market makers price those into option contracts at those times. So I hope that kind of answered why the premiums are so expensive today. And such a move that we had, like we had this downward move here, which on a normal day would probably have netted us, 30 to 45%, only got us 10%. So does that make sense for you all? So, Steve, to answer your question, SPY and QQQ, they move similarly, but not exactly. And the reason for that is because QQQ is essentially almost entirely tech, right? SPY is heavy tech, but it's not all tech. Oh, Ace actually answered that as well. So with SPY is more of the total US market, right? It's essentially the 500 largest companies in the country that are public. Whereas QQQ is an entirely tech-based ETF. Okay. And what that means is when we have tech earnings like we have this week, and things are going to be trading at a little bit lower, like actually Apple was on a downtrend and Google was on a downtrend earlier, right? Those heavily affected QQQ and Amazon as well, Amazon and Meta, because Meta was actually down. But you have things in SPY like, you got Home Depot, you got, uh, Walmart, those other like retail companies where if they get a push, SPY is also going to see an uptrend. So that's why oftentimes while they do move similarly, they don't move exactly because SPY is 500 of the largest companies in the US, not just the largest tech companies. You're welcome. All right. So that being the case, I'll open the floor up here. Q&A time, guys. I hope this kind of like gave you some insight. This was really kind of to the point for today, just because there wasn't a lot of volatile movement, being that it was such a range trading day. So I want to take this time to kind of give you some more time to ask questions, and I'll answer them to the best of my ability. So feel free to shoot. Tesla and Meta. Okay. So we'll look at Meta first. So Meta, we're gonna take a look at the 1 minute from market open. And you can actually see Meta was on a clear downtrend. So this kind of answers your QQQ question as well. Because Meta went from open up at roughly 310, got it 311. Oh wait, no, it's on the right day. Okay, John, I'll answer that question once I do the Tesla Meta recaps here. And then that's actually a very good question. So here with Meta, you see the massive, oh my gosh, hold on. There we go. This pure downtrend that we were on here. Right from the open, all the way down. And even, I mean, we're up 46 cents after hours, but $3 down from where we're at on Friday. Hit overbought on very low volume. So with Meta, this actually is a clear image of a downtrend with lower lows such. But let's take a look at another time frame. So look at the 5 minute. What does this look like to you guys? We couldn't break past the EMA 58 at any point, and we basically rode under the EMA 20 all day on the 5 minute chart. Right? Again, clear indicators of a downtrend. Let's take a look at the 15. You guys ever been on one of those giant inflatable slides? This is kind of what this reminds me of, right? Clearly broke past all levels of support here because it was riding the support line on the way up during previous days. Broke below the 20, which immediately shot it below the 50 and the 60, which means the next level of support was what? The 200, right? We got to the 200, rode that for a little bit. When the EMAs crossed, EMA 20 and EMA 200, we got our def cross and we rejected immediately off of that. So that was a significant downtrend. So this was a key area. Once we saw this confirmation here, it would have been an amazing place to take puts. Now, similarly to Google, though, Meta contracts were super inflated. And as you guys know, Meta is already a a pricey company without any sort of indicators of or IV pushes, right? So this right here would have been a good point to take our entry. But even still, based off the IVs that was going on today and likely throughout the early part of the week, that probably would have only been like a 15 to 20% return, which is still not a bad return at all. But on a normal day, a move like this is probably netting us 60%. Easy. So that's Meta. Meta was just in a clear downtrend all day. Like I said, on the 5 minute chart, rolled 20 all the way down, except for one 5-10 minute span where it retested 50 and immediately rejected. On the 15 minute chart, we just blew past all EMAs very, very early in the day, and there's no support once it lost the once it bounced off the death cross here. So Meta was a pretty cut and dry. Well, even on the daily, we lost key support here. We lost the 20 on the daily, which likely means we're going to retest the 50 on Meta, barring any unforeseen news in the tech space. Okay. Also, one thing to kind of take into context with Meta is Meta owns Facebook, it owns Instagram, and also they had a huge tech not announcement, but a huge tech news cycle in recent last week or so. Does anyone know what went on with Meta and some of its subsidiaries? Yes and no. The AI didn't really affect Meta. Yes, John, that's what it was. Yes, finance girl. It was Threads. Now, you guys may not know this, but Threads actually had a 70% decrease in its user base this week versus last week when it launched. Right? 70% drop because everyone's like, well, this for lack of a better term, this thing just sucks. you know, it's like Twitter, but without the fun. And then now Elon Musk just rebranded Twitter to X. That's a whole nother story. But Threads, that right there also likely played a factor in Meta's Meta stock kind of taking a bit of a tumble. In addition to it losing its key area support here on the daily and likely pushing towards a retracement to the EMA 50 here. So that's Meta for you guys. We'll take a quick look at Tesla, which, as you guys know, I think is one of the most volatile tickers. But in general, I think I'm still bullish overall on the company, right? So this is the 1 minute chart on Tesla. Tesla, on the other hand, was in a pretty decent uptrend for a good portion of the day here, right? We opened up pretty low, finished $10 above where we closed, and we're still up $1 in aftermarket. So I think Tesla has room to be bullish. Got a lot of room to run here in the on the EMAs. We just pushed past. Yeah, I mean, Tesla wasn't a severe downtrend last week, Steve. So shorts are understandable. And I think a lot of the shorts are betting on, again, just the eccentricity of Elon Musk, because he's an odd guy. He's a smart businessman, but he's an odd guy. And he just kind of does stuff on a whim. And yes, Tesla likes to correct itself. But I think likely, let me look at the longer time frames here. Because on the daily, it looks like we're still in an uptrend. 5 minute, we are still in an uptrend. Yeah, we're in an uptrend still in the 5 minute. The 15, we're actually pushed past key areas of resistance on the 15, and we look to be retesting the next area of resistance here. And then let's take a look at the daily, because that would kind of give us a clearer picture. And on the daily, what happened? We actually just retraced back to our previous area of support. So if we're able to break past this here, we'll likely see an uptrend back near the upper levels of the 290s. So Tesla as a whole, I'm bullish on. Bullish on the short term and the long term. And as long as we don't reject here on the daily, we shouldn't have any issues getting back up to 290s, the high 299s. On what time frame, Steve? Because if we're looking at on the daily, the key area is to 245 range. If we look at the 15, Key area is the 260s. Yeah, 267, 265 would actually be the key area. The 5 minute, again, 265 is the key area. So as long as it doesn't lose the 60 at 267, Tesla should have plenty of room to kind of push back towards the upside, as long as it doesn't lose 267s. All right, Lorenzo, I will get to that question 1 second here. We answered John. He had asked a question here earlier. So the NASDAQ rebalance. So I know you guys have heard about it in the chats last week, and you guys are probably like, what does that even mean, right? So the NASDAQ is going to rebalance itself because there's an over saturation of specific companies in the Nasdaq's total portfolio, right? So what does that mean? You're like, all right, trader, say it in English to me, please. Right. So with companies like Apple, Google, Microsoft, and Nvidia, Meta, I think Amazon and Tesla are the other ones. But those companies make up such a huge portion of the Nasdaq as well as other indices. But because they've been on such an insane run this year, I mean, all those companies are up significantly from where they closed last year at. The Nasdaq has to actually rebalance so that way it's not going to basically have those seven companies solely affect the movement of the index, right? Kind of like we were talking about with SPY and QQQ, in a sense, like if the Nasdaq doesn't rebalance, it's basically QQQ again because those tech stocks have such an enormous effect on the movement, right? So it's going to rebalance to kind of boost its holdings of smaller cap companies. So that way the index performs a little bit more healthy and not skewed towards one sector in any particular way, right? Does that make sense, John? Okay. What can I clarify a little bit more? Mm-mm-mm. Let's see here. Well, while he's typing a little more, I'm gonna scroll. So we should anticipate bond price moves in this ticker that rebalance. All right, hovering salt. So you asked, should we anticipate violent movements on these tickers during the rebalance? Uh, all right. So it's a little bit more complicated than that, than a yes or no answer. Just because with the rebalance rules, and it's designed to kind of shift the how much weight a particular company has in the index. You're trying to figure out how to phrase this. Let's see here. Basically, it's going to adjust its own holdings. So we could see a bit of a push towards the downside, which might be, partially why, puts are so high as well as the overall state of the market this week. But right now, I wouldn't say that it's gonna have any it's not gonna be a major move. We're not gonna see no $10 price swings on like Google or Meta or anything like that. It's just gonna kind of buck them out of portions of the indexes, so that way they are no longer accounting for 50% or more than 50% of the total index weight. Yep, exactly. And with that, with rebalancing, I know a lot of people are kind of like worried about it because it doesn't happen often. In fact, it's only the third time since '98 that this has gone on. So that can kind of put that in perspective for you guys. Think about how long ago '98 was. How old were you guys in '98? But that's kind of what that is right there. Let's see. All right. So, sir, should we anticipate any oil companies like CVX, and Exxon Mobil? Okay. So Exxon, let's take a look at it. So looking at Exxon Mobil here is also one of the companies that's in SPY, by the way, guys, for those who did not know. Um, Looking at the 1 minute chart, we're entering overbought territory. We actually just saw a retracement back down to the key support on the 50 or the 20 below the 200 here. Budweiser got a lot of stuff going on with it right now, just publicity wise. We'll talk about that in a second. But um, Exxon Mobil. Mm, well, we've got some room to be potentially pushed towards the upside if we get a bounce here off of the 50, at least on the 5 minute. See if this okay. The 5 minute and the 15 minute basically have the same chart, bouncing off the same key area of support. If that holds, ExxonMobil could see a push towards the upside. But what I would be a little bit more concerned about right now on Exxon, at least, is the possibility of a double top at this level here once we get past these key support areas, right? Or the key resistance areas. Because if we broke past this key resistance area, as we've done here and here, we've immediately saw a retracement back down and below them, right? So that being said, I would anticipate Exxon has small push to the upside before retracing back down, right? Because looking at the daily, it's been a few months since it hit its highs of 118. So, and even that was a double top case scenario, sent us rocketing back down. So we'll see how it goes. I mean, price of gas is actually going down a little bit as well, so that affects oil prices because the price of a barrel and everything like that affects the profitability of the companies. So I would say short term, I'm a little bit bearish on Exxon. Even if it passes these key areas of support, we probably see a retracement back down to the key areas of resistance. We'll probably see a retracement back down to the key areas of support again. Let's see here. I hope that answered your question, Jigs. And Finance Girl, you asked triple top on the daily on Tesla. So let's take a look. So taking a look at the daily on Tesla. I mean, yes, that would be a confirmation after this rejection here, would be a triple top. It's kind of like, actually might be a quadruple top. We got a triple top right here. A very, very tight triple top, but triple top nonetheless. So you're welcome. You're welcome. So yes, Finance Girl, you are correct with the triple top of Tesla. However, I'm still pretty bullish on the company because again, we have to kind of push back towards that level, and that's a huge swing before we get to that triple top territory because that's a $30 price point. So we're at 267, and the tops are at 290 in the 290s. So I think there's still significant rooms for the stock to actually move before that rejection happens. All right, and John, let's take a look at Budweiser while we are right. So on the daily, we see a significant downtrend the last few days. Now, again, as I mentioned, Budweiser has not been at having the greatest publicity recently. There's been a contingent of the country who was not happy with some of the branding going on with the company, and as a result, the expectations and the overall forecasts for the company financially have seen a little bit of a decline, right? That being the case, it's hard to say because anytime there's politically driven backlash, let's see. There we go. Still the same kind of same story. Still in a significant downtrend. And I'm not really yeah, not worth trading this at all. And again, a lot of it has to do with its backlash going on right now. A lot of people, the discourse that you see on like a lot of social media right now is that they're choosing things like Coors Light or you know things like that for uh, as they've been called the anti-woke beers. So regardless of your political affiliation, that's kind of what's going on with Bud right now and Anheuser-Busch. But just something that it kind of muddies the waters a little bit because when there's political intrigue around a particular company or ticker, it kind of throws conventional analysis out the window. Does that make sense, John? Because a lot of it's affected by press and publicity. All right, Patty P. So we will look at this. Oh, yes, Lorenzo, I'll answer your question and then I'll look at Patty P's question, and that will be the last one for the day, guys. So, Lorenzo, thank you for reminding me, Lorenzo, because I'm not going to lie, I did forget. So, plug PayPal / SQ in the long term. So, PayPal. PayPal is one of my favorite long-term holding stocks, just because I like the push of the company, and as you saw during this pandemic days, it can get significantly higher than where it's at right now. I think it's actually pretty undervalued overall because the brand itself still has value, and the concept, as long as they continue to innovate and make change, and you're seeing a lot of it with the way financial transactions are being handled, whether it's Cash App adding things or Zelle being a little bit more intuitive. PayPal's had a significant impact on the financial landscape. And I think as long as they continue to innovate, the company itself is a pretty good long-term hold, in my opinion. So with PayPal, like that's something I just think just holding it and, having the shares versus trading options on it wouldn't be a bad idea if it were me. And then you asked for SQ. So block. All right, so this is actually on a lot of people's watch list. If you're paying attention to like people on socials and just trending tickers in general, SQ has a lot of potential. Yes. Elon, there's that was part of the impetus between his whole shift of Twitter to becoming X. He's trying to take over a lot of different things, and we'll see what effect that has on not just his competitors, but also his own existing companies. But with XQ, we're looking at it kind of like, all right, from a purely technical analysis standpoint, looks like we're seeing a retracement back down to the EMA 200. As long as we don't lose that support, we actually get a bounce where these EMAs cross. We'll see a little bit more immediate upside, but if we see a fall below, we're going to push back towards the lower end of the 60. So that's on the daily chart. Looking at the 1 minute, it's kind of a similar story. Trading a little bit above EMAs here. 5 minute chart, same deal. That 20 is the key support area. And on the 15, there's also the support area. So as long as it doesn't lose that support area because it's consistent across all time frames, we should still see a little bit of a push towards the upside in the immediate short term. If not, we're going to likely have a bit of a downward spiral once that support of the EMA 20 is lost, because then the next area of support will be the 60. And that right there is also a tough area because the 60 and the 50 have crossed, meaning that if it loses either one of them, there is no support until it hits the 200 further down. Okay. You're very welcome, guys. You're very welcome. And let's see. EXPI. Now, if I'm being honest, I am not really familiar with this ticker. I haven't watched it. I know very little, if anything, about the company. So this is just a blind analysis based off of what I'm looking at on the chart. Looks like it's just coming off of a no, Ben, I don't know every stock on the ticker, unfortunately, on the market. But we're seeing looks like it had a bit of a rejection on the double top here. And EMAs are very, very tight. That right there, I don't like. Because even zooming out, ooh, there's a huge gap. It's a pretty ugly chart. I'm not gonna lie to you. Again, this is 15. Let me look at the 1 minute, see if it's a little cleaner. And the 1 minute is just as ugly. Yeah, a lot of gaps as well. So this is not something, if I'm being honest with you, this is a ticker I would stay away from, just because I don't like how tight the EMAs are trading. I don't like how spread out the candles are. I don't like the size of the wicks in relation to the bodies on the ones we're having huge price movements here. And it doesn't look like there's any rhyme or reason either. Again, I'm not too familiar with the company, so I don't want to be, maybe I'm missing news releases or announcements or something like that. But just from a purely objective standpoint, this is something I would stay away from. So Patty P, I saw you left and came back. I hope you caught what I was saying. Hope that kind of answered your question, because I'm just not something I would kind of stomach on that regard there. And then the last thing, Finance Girl says, Disney has potential. You're welcome. Now, Disney is an interesting company, right? Because as you can see, let's take a look at, zoom out and look at the daily. We're in a little bit of a downtrend, right? Now, compare this to, this is the heights of, like, Marvel was pumping out Disney Plus content. Marvel movies were, just coming back to the theaters, and stuff was starting to make money again. And then look at what's going on now. This is actually around the time Bob Iger left, and then we saw like the CEO that replaced him kind of tanked everything. Then he actually came back around October. We saw a little bit of a retracement back up in Disney's fortunes. Now, Disney overall, I think, could be a bullish play. I think the stock itself, the company itself, still has room to grow, and we are pretty oversold on all time frames. You saw the daily, look at the 15, and even on the 5 and the 1, right? So there's still room for the stock to go up. The key areas, because it's been riding the EMA 20 very, very consistently over the last few trading periods. So I think a push past that. The 60 is probably the key line of resistance here. Yeah, take a look at the 10. Yep, the EMA 60 on the 1 minute chart lines up with the consolidation here, as well as here, 15. So I think once we get a push past here at the 60, we should be good, because even on the daily chart, we're seeing that tight area there as a key area of resistance, as evidenced by what rejection point we've had the times it has hit the downtrend. So Disney, I think, like I said, it's a very interesting ticker. I think we can have some room for the upside there. Wouldn't play option on it just yet until I get a confirmation. I would like to see it past the 20 on the daily and kind of get a close above that on consecutive days. Then that would kind of signal to me, okay, we're in line for a little push towards the top. And we'll see from there on Disney. Now, Ben, I'm not sure if She-Hulk was that good of a show, that, because Secret Invasion is not doing that well either. So it's the state of the Marvel machine. People are sick of Marvel after 17 years. So we'll see what innovation they have there. But you're very welcome, Finance Girl. I know this call was a little bit longer. It was a little bit more of me just kind of talking about tickers. So I do want to thank you guys again for sticking it out with me. You guys your questions were very insightful today, and it allowed me to kind of share some knowledge and actually learn about some tickers that I didn't know too much about. So I want to thank you guys for that. And actually have a big announcement for you guys. So before I do that announcement, as usual, guys, please drop your Discord names in the chat for attendance purposes and potential giveaways or whatever we might be doing. It's always fun to do that. And just wanted to now that I have you guys' attention, I would like to announce on behalf of the whole trading analytics team that Mr. Ben V is going to have a separate channel to post his V analysis on. So that will be for you guys to kind of go in and see that. That way, we're still going to be in the chat. We're still going to be doing that, but give him his own dedicated V channel. So that way you guys can partake in a lot of the fun as well. So yes, everyone give a shout out to Ben. Very well deserved. He's done a very good job with his own trading. I mean, just watching his confidence grow has been insane, right? He had conversations before, and just to see the change in his trading over the last month and a half, 2 months has been fantastic. So we're very proud of him, and I wanted to announce that here. So thank you guys for sharing this moment with him. That being said, I appreciate you guys all for hanging on. Again, drop your Discord names in the chat here, and we will be back at it tomorrow morning, guys. So let's be ready to crush it again. All right. Appreciate you all. Have a great night.